I'm Rick Plum with this week's Lucia Capital Group Weekly video. In last week's video, I talked about some things that might trigger a tax audit. Sometimes it's just a matter of random chance. But if your tax return is somewhat askew from other similar returns, if your deductions are higher than normal, or your income changes dramatically, your odds of an audit tend to go up. While there's no guaranteed way to avoid a tax audit, there are some things you can do that may reduce your chances of being called before the great and powerful Oz.
I want to go home.
First, be honest with what you're claiming as a deduction. That probably goes without saying, but it's not uncommon for people to try to push the envelope as far as they can. But remember, there's a big difference between tax avoidance, which is legal and maybe an excellent strategy, and tax evasion, which is illegal and of course never a good idea. For example, if I don't want to pay a toll at a particular highway, which is a form of a user tax, I can simply choose to take another route that doesn't cost anything. That's a form of tax avoidance. But if I crash the gate doing 98, that's tax evasion. So keep it legal and honest. Another way to potentially avoid an audit is to file a return every year. Under normal circumstances, if you don't owe any taxes, there's no penalty for not filing. But it may be smart to file one anyway, because if the IRS algorithms notice that you filed every year and you aren't filing for the tax year this year, that could lead to an inquiry, if not an actual audit, depending on what they find. Along those lines, be sure to file on or before the due date. They tend to get a little cranky if you file even one day late. So to avoid waking up the giant, it's best to get your return filed on time. Now, if you don't have the money to pay what you owe, send in what you can before the deadline and at least avoid that hassle. You can always amend your return at a later date if you have to. Now, that's not the ideal situation, but it's better than not filing on time. And if you're going to pay someone else to do your taxes, be sure to use a reputable tax preparer. It might be tempting to go with the person who tells you that they can give you the biggest refund or who promises the lowest tax bill. But look for someone who is either an enrolled agent or a CPA. Generally, the good ones will know what the current tax laws are, they'll know what deductions you can and cannot take, and they won't make promises to you ahead of time about your taxes. Now, one last thing. If you are picked for an audit, the IRS will only contact you via the U.S. Postal Service, the regular mail. If you get a phone call, text, or email from somebody claiming to be from the IRS, it's very likely a scam. Delete it. For an actual audit, gather all the documentation for the return in question and be sure to respond in a timely manner to all requests and inquiries. If you're mailing them information, be sure to get a confirmation of delivery. As scary as an audit sounds, remember that the percentage of audited returns is very small. Now, if you follow the advice I've given you, chances are very good you may not have to worry much about it. If you'd like to know more about what you can do to help manage your taxes and avoid paying more than you should, give us a call. We're here at Lucia Capital Group, and we do this every day. And as always, we're here to help.